Hi, everybody. So, welcome to the last tips and tricks session that we have before the new year. So, today Yannick's going to be covering SAP Business One inventory audit reports, and we'll be picking back up on January 7th. So, just a second here, Yannick. I'll share the screen.
Yeah.
Make you presenter. Hang on here. There you go.
Okay, it was on
There we
mute.
go. Okay, good.
Perfect. So, good afternoon, everybody. So the audit report in SAP. So the audit report, there's two ways to access it. One way is through the menu of inventory. So inventory reports, inventory inventory audit reports. That's one way, but you can access it directly from the item master data. So it's really useful when you have just to look and to analyze one specific item and to try to understand where the quantity and the values are coming from. So you can just right-click anywhere in the on the item master data, you just right click and you do inventory audit report. I think there's maybe some people they tend to use the inventory posting list. It looks a little bit quite not. It's similar in terms of look, but in reality you don't see all the value and so to do analysis just strictly on the value, this one will only look show the transaction posted, the variation on the quantity, but the inventory audit report, it will show really the cumulative quantity, cumulative value. There's always also the option to add and remove columns like any other screen in SAP. So that's the best way to access this one specific item when you want to as I said to drill down and to understand where the quantities and the value are coming from, and you see there's no by default there's no selection of a range of dates, so it will show everything from the beginning because it's SAP behind in the database, the way that is keeping track of or is calculating the value and the quantity for each item. It's really based on each and every transaction. He's not keeping in a separate database the actual value, the calculation of the cost. It doesn't work like this. You have price lists like the last evaluated price that it's being reevaluated, but at the end, the inventory valuation that will be connected to your GL account, it's really based on the calculation of each and every transaction, the plus and the minus. So the cumulative quantity, cumulative value, it's plus and minus all the deliveries, receiving, direct invoice, credit notes, all the transaction. At the end, will give a cumulative value, and it's the cumulative value divided by the cumulative quantity. That most of the time, if you're in average and moving average, it will probably be correspond to the cost of the item stored in the inventory data tab here. So you will see item cost. It will correspond to that $400. So that's one way to access it. But if you want to really have a full view of all the items, if you want to just at the end of the month to know you see the amount on your general ledger, it's the detail of all the items. You have to select it from the menu, and then you have the option of the posting date. Sometimes it could be useful to use the system date just to try to see what has been posted after the month, but backdated for before the end of the month, just to see if there's any transaction that was posted after closing the month. But normally, posting date, that's the date that will correspond to your general ledger. So the inventory audit report, the date range that you have to enter here, it's to show more or less detailed information. So if you want to analyze, you see all the transaction within a certain period of date, you will see the difference here. If I select only let's say 2018, it will show only items with transaction between that range of dates. Okay, so they ain't gonna show anything else. But if you want to see all the item, you have to select this one, this checkbox. It's really important because if there's no transaction, the item won't show up. So you have to display the opening balance just to show all the item. You want to see all the item, not only the one with transaction. So depending on, you see this one, no transaction between that range of date, but is still showing up because there was a cumulative value at the end of 2017. So this is good for analysis to do this. But if you just need to pull out an inventory listing for let's say the auditors or for to match, because that report, if you select all the item, if you normally this is the one that should balance with your general ledger. If it doesn't balance, then you need to dig down a little bit and to understand what went wrong with your transaction. There's many way to screw up, if I can say, to screw up your GL account. But this is the most reliable report for the inventory value. So if it doesn't work, if GL doesn't work with this, doesn't match the numbers of the inventory audit report, it's because something went wrong or if someone did the transaction not in the proper way. So if you just need to have an inventory listing at the end of the year, by example, you don't need to see all the transaction. There's no need. If they will show up, if there's a transaction on December, it will show up. But that's not the purpose of having just a listing. So by item, display opening balance, really important. You click on this, it will show you the inventory, the full inventory of the company, quantity and value. And if there's any, and as I said, you see this one, I think, had one transaction in December. So this one, there's a transaction in December, but that's normally the inventory counting adjustment. It will show up at the end of the year, so being posted at the last day of the year. So this is so the display is summarized by item, but you can have also summarized by GL account. So if I have multiple GL account attached to my my item, it will all showing up here. I have only one on my case on my demo database, but you can have multiple GL account for the inventory, finished good, the raw materials, supplies, whatever. Here it's more for doing analysis, filters. You can filter the audit report just on a specific code, a bit similar than what we did directly from the item master data. It will, in reality, that's what the system is doing. He's putting automatically the code here, but with no range update. Item group, you can just focus on a specific item group, and here properties, you're all aware that properties, it's pretty much on every selection criteria windows for reporting. We can focus on a specific GL account if we need to just analyze one specific GL account and try to understand. But if I don't select, then I can see at least at the beginning what are the accounts attached to my who have recorded inventory transaction, so I can see them all, and then after that I can just focus on one single one. If I select by item here, I have the option to have it grouped by, so if I put a little bit more transaction, I can have it grouped by warehouse. Sometimes it could be useful to see warehouse by warehouse. It could be sometimes just a transfer between a warehouse to another. Sometimes it could explain some variation or why where the goods are coming from. And you have always the option to hide the item if there's no value on at the date that you are pulling out the report. So this is it's not uncommon. I'm pretty sure that everybody have experienced the fact that you see I'm pulling out that listing and why it doesn't balance with my general ledger. So there's many different reasons, but I would say the first an easy one, it's the journal entries. So normally we don't post journal entry into a GL account. So we will recommend when we create the chart of accounts. Here we have, let's say this one, my 135 inventory finished good. I block manual posting. I don't want that number to be affected by journal entries, because journal entry, it's not an inventory transaction, and that transaction never go through the audit report. It never show up on the audit report, because audit report, it's strictly inventory related transaction. So if you need to do, let's say there's no really a good reason other than, let's say you want to record a bulk provision for obsolete product, and you want just to adjust your results based on an overall you see provision for your inventory. So that, but then we suggest to use a different account if you want to avoid or have to try to reconcile the GL between the GL and the audit report. It's better to use a different account, but not to post transaction into the main GL account. So there's many other reasons why a GL doesn't balance. But you see, when we do analysis like this, it could be quite hard. There's some limitation into the inventory audit report. I'm pretty sure that a lot of people, they have experienced that. You see, by example, it would be good to have that report by group of product, or to show, let's say, to show the actual item cost. Is not showing up here. There's no way you can see the cost of the transaction itself. Okay, the cost of the transaction, but at the end you don't see. You have to divide the cumulative value by the quantity to get the actual average moving average cost. Okay, so this is some limitation, and if you want to do some analysis, sometimes it could be quite a challenge to do to try to understand why I'm not balancing the figures with my general ledger. So we have developed queries that could help doing that. And I would say it's really hard to be better than Excel when it comes to the time to do deeper analysis. And so there's two queries that you see if somebody would like to have them, it's not really expensive to have that installed into your database, but it could be really useful to understand why I'm not balancing. So there's two queries. One it's coming from the inventory transaction, and the other one, it's exactly the same. You see by transaction type, it's coming from the posting journal entry. Okay, so so normally these two amounts, each and every single amount, they should be exactly the same if I'm selecting the same period. Here I'm taking just the fiscal 2019, and right away I see I have a difference. So with that tool, it could be really easy to focus or to identify the transaction that creates the problem. Okay. So if I look here, just journal entry, you see 136, just the journal entry. We know that journal entry, it's not inventory transaction, so let remove it. Okay. Then I'm pretty close now. I'm about 2,000, so I just need to see numbers by numbers, and I see here at the good receipt 140, good receipt 142. Then I know it's in my good receipt. So which transaction can create that? So just over here, you see 600, 200, 2,100. I know I did that on purpose just to show you that you see, I can do for wrong transaction myself. So here I have my a good receipt PO 169 with 0 value in my GL. And my inventory transaction, I have 2,000. So how come? So for sure, that's creating a discrepancy. So if I go into my good receipt PO, I will see right away what is my problem. So inventory transaction, good receipt. If I take 169, we'll see the journal entry. Oh, it's inventory to inventory, but we know that normally when we do an inventory, a good receipt, it's a receipt, so it has to go into my inventory finished good account, but not to get out. You see, this is an adjustment. It should go into the balance sheet. So that's why it's not showing up. It's just there's no value because the discrepancy didn't go into a variance account or a gain or loss on inventory variation. It should go into my results, not my balance sheet. So that's why this is that kind of transaction could create discrepancy. And without, honestly, without a tool like this, I don't see how it's not impossible, but it could be quite a challenge to try to balance the GL. So this is so it's one reason. Other reason, sometimes it could be also someone put enter an AP payable into a vendor, a service invoice posted into the inventory GL account. It's not a journal entry, it's a real transaction, but it's not an inventory transaction. It's like doing a direct posting into the GL account. That will create discrepancy as well. So this is a couple of examples, but with the tool like with the queries and with Excel, sometimes it could be you can save a lot of time trying to reconcile the and then it
Yeah,
it
and
helps
Yannick,
also.
just
Yeah.
just one thing. It's because you were saying this morning when we had the French session that if somebody wanted this query, it would take you about 2 hours of work just to get it up and running for them.
Yeah, that's right. It's not really long to install. But it takes about 2 hours just to adapt to your GL account because you have all the different chart of accounts. So, uh, but it's yeah, the query it's pretty much doing copy and paste, and then do some validation at creating the link into Excel, and then you're ready to go. You see, this is a direct link. I don't have to do any copy and paste value. I just need to right click, refresh. It will refresh from the database directly. This is really coming from SAP database. It's the same numbers.
Okay, so if
Uh,
anybody wants this tool, they just have to send us an email either to support or to me or you, Tracy at Forgestic, and we could just organize a discussion with whoever wants it. So if anybody does want this tool, you know, I think it's really interesting.
yeah, and it could be it can evaluate also because you see you have the item code, but you have the item group, so you can build your own report. This is a pivot table, so you can build your own report. And we can add more to that. You see, if you want to attach and to have a specific price list, let's say you have standard cost price list, or you have a FOB price list. If you want to compare value, actual value with let's say your standard cost, that tool could be also adapt to that, to compare two value together and to see, okay, why I'm not getting the gross margin and I'm supposed to. Then you can create a standard cost price list based on, you see, your own calculation of the landed cost for new item, and then you compare. So it could work also for a product production item also that you produce yourself. It could be really a tool to do a deeper analysis. And when I say don't post journal entry, there's no reason to affect the inventory by journal entry. First, you will create discrepancy, and at the end, there's plenty of option. You see, there's good receipt, good receipt. You have also inventory evaluation when there's a mistake on the cost of an item. There's all the transaction type you can do all the time at a real inventory transaction to adjust your inventory. There's no need to do a journal entry. One problem also I mentioned this morning in the French session. What we experience sometimes with customer, it's you see, you create a new item, it goes to a specific item group. The item group is the one who's driven the GL account distribution. You see the account determination. It's driven by the item group. You receive your transaction into a specific GL account, and you realize 2 days after that you see it is not part of that item group. So someone's will go into the item master data, change the item group to another one, but the other one is not using the same GL account. It's a different one. Let's say you receive it into your finished good account, but in reality it's raw material. It's not the same GL account at the end on the balance sheet, but you receive the good into your finished good, and when you're going to use your raw material for your production, it will be taking out of the raw material GL account. So at the end, your inventory audit report, you will get a plus and a minus at the end. It will probably become to zero if it's fully used, but at the end, the report by GL account, you will see a discrepancy. The in was into the finished good, and the out was posted into the raw material. That's pretty common mistake that some customer are doing. It's not necessarily obvious and then you see the that's one of the reason. I'm pretty sure that some of you have seen that message before. If I go into my setup, into my inventory item group, if I change, let's say, storage here, if I change my inventory account from 136, by example, you will see the red message: changing the account can't result in erroneous inventory. Okay, disappear. But you see, you have a warning at the end. It will let you go, but you have a warning. And this is one of the reasons why you get a warning, because you can create, by doing that, it's possible to create discrepancy between your GL and the inventory transaction. So this is a couple of examples just to give some hint on the way to try to reconcile the inventory with the general ledger. So cover pretty much the what we can do with the audit report and in combination with the Excel spreadsheet. I know there's also this is the report if you want to get the real value at the end of each and every month. Other report, if you want to do analysis, there's always also the batches and serial inventory audit report that exists. But this one, it's more to be used with to do analysis of specific item and try to see by batches or serial number, try to drill down on more details. But this is not the right report for trying to balance the numbers, the figures with the general ledger. But it's another tool that it will. It's an audit report, but it's linked to the batches and serial number tables to give you more details. But this is more for analysis than for reporting for your fiscal, for your month end or fiscal year end. So this is it. I think we cover pretty much what we can do with the audit report.
Thank you, Yannick. Very interesting. Does anybody have any questions?
No, it's quiet.
Yeah, it is quiet. That look, if anybody does have questions, well, look, thank you so much, Yannick. And again, this is our last session, everybody, before the new year. So I just want to wish everybody a Merry Christmas and a Happy New Year. And we'll be picking back up on January 7th. And if anybody is interested in the query that that Yannick showed us, his Excel report, just send me an email, tracy@forgestic.com. And thanks, everybody. So have a nice weekend.
Perfect. You too.
Okay, bye.
Hi, everybody.
Thank you. Bye.